Welcome back to BitcoinDorks. Today, we're diving into some big news that's been making waves in the crypto community. Recently, a colossal Bitcoin transaction caught everyone's attention. A mysterious whale, known for its massive holdings in the crypto space, made a jaw-dropping purchase of over $1.2 billion worth of Bitcoin. That's right, you heard it correctly, $1.2 billion. Now, you might be wondering, who is this whale and what does this purchase mean for the crypto market? Well, let's break it down. First off, this whale remains anonymous, shrouded in mystery like many other prominent figures in the crypto world. However, its impact on the market is undeniable. Such a massive purchase sends a clear signal to investors and institutions alike that there's still strong confidence in Bitcoin as a store of value and an asset worth investing in. The idea of a Bitcoin exchange-traded fund, ETF, has been circulating within the crypto community for years, tantalizing investors with the prospect of its approval. Why all the excitement? Well, picture this: if greenlit, a Bitcoin ETF could act as a conduit, ushering in a tidal wave of institutional investment into the crypto space. Just imagine hedge funds, pension funds, and other major financial players gaining seamless access to Bitcoin through tightly regulated financial instruments. Despite its growing acceptance, Bitcoin has faced numerous hurdles on its path to mainstream adoption. One of the most significant barriers has been the lack of accessible investment vehicles for institutional investors. While retail investors have flocked to cryptocurrency exchanges to buy and trade Bitcoin, institutional investors have been largely sidelined due to regulatory concerns, custody issues, and the absence of regulated financial products. In the case of a Bitcoin ETF, the underlying asset is, unsurprisingly, Bitcoin itself. By purchasing shares of a Bitcoin ETF, investors gain exposure to the price movements of Bitcoin without the need to buy, store, and secure the cryptocurrency directly. This indirect exposure to Bitcoin opens the door for institutional investors who may be hesitant to navigate the complexities of crypto exchanges and custody solutions. So why is there such fervent anticipation surrounding the approval of a Bitcoin ETF? The answer lies in the potential influx of institutional capital into the crypto market, which could fundamentally reshape its landscape. As it stands, institutional investment in Bitcoin is limited primarily to hedge funds, family offices, and a handful of forward-thinking corporations. While these entities have undoubtedly contributed to Bitcoin's growing legitimacy as an asset class, their participation pales in comparison to the vast pools of capital controlled by institutional investors. Imagine the impact of major pension funds, sovereign wealth funds, and other institutional players entering the crypto space en masse through a regulated ETF. These institutions manage trillions of dollars in assets and operate with a long-term investment horizon. Their endorsement of Bitcoin as a legitimate investment could signal a seismic shift in perception, propelling Bitcoin into the mainstream and solidifying its status as a bona fide asset class alongside stocks, bonds, and commodities. The entry of institutional investors into the crypto market could bring much-needed stability and liquidity, mitigating some of the wild price swings and market volatility that have characterized Bitcoin's journey thus far. With their vast resources and risk management capabilities, institutional investors have the potential to dampen volatility, making Bitcoin a more attractive option for conservative investors and institutions seeking stable returns. But the implications of institutional participation in the crypto market go beyond mere price stability. Institutional investors bring with them a level of credibility and oversight that could alleviate concerns about fraud, market manipulation, and regulatory compliance. By subjecting Bitcoin to the same rigorous standards applied to traditional financial assets, institutional investors could help legitimize the entire crypto ecosystem in the eyes of regulators, policymakers, and the general public. Consider the sheer magnitude of institutional funds that could flow into Bitcoin through a regulated ETF. Hedge funds, with their appetite for high-risk, high-reward investments, could allocate a portion of their portfolios to Bitcoin as a hedge against inflation and economic uncertainty. Pension funds, tasked with safeguarding the retirement savings of millions, could diversify their holdings by adding Bitcoin to their investment portfolios. But beyond the influx of institutional capital, the approval of a Bitcoin ETF would signal a watershed moment in the mainstream adoption of cryptocurrencies. For years, skeptics have dismissed Bitcoin as a speculative bubble, a passing fad, or worse, a tool for illicit activities. However, the endorsement of Bitcoin by regulatory authorities through the approval of a regulated ETF would legitimize the cryptocurrency in the eyes of traditional investors and pave the way for broader acceptance in the financial industry. Of course, the road to a Bitcoin ETF has been anything but smooth. Regulatory hurdles, market manipulation concerns, and custody challenges have thwarted previous attempts to launch a Bitcoin ETF in the United States. The U.S. Securities and Exchange Commission, SEC, the regulatory body responsible for approving ETFs, has repeatedly expressed reservations about the potential risks associated with Bitcoin and the nascent nature of the crypto market. Nevertheless, proponents of a Bitcoin ETF remain undeterred, pointing to the growing institutional interest in cryptocurrencies and the maturation of the crypto market infrastructure. Recent developments, such as the entry of established financial institutions into the crypto space, the emergence of regulated custodians, and the introduction of Bitcoin futures contracts on major exchanges, have bolstered the case for a Bitcoin ETF. In conclusion, the idea of a Bitcoin ETF represents more than just another financial instrument. It symbolizes the convergence of traditional finance and the crypto revolution. By providing institutional investors with a regulated, liquid, and efficient way to gain exposure to Bitcoin, a Bitcoin ETF could unlock a new era of growth and adoption for the cryptocurrency market. While challenges remain on the path to approval, the potential rewards for investors and the broader crypto ecosystem are too significant to ignore. And there you have it, folks, a comprehensive exploration of the potential impact of a Bitcoin ETF on the crypto market. As always, we'll continue to keep you updated on all the latest developments here at BitcoinDorks. So make sure to subscribe to our channel and hit that notification bell so you never miss an update.